Welcome to Around the Blockchain. Don't forget to like and subscribe.
All right, Dave, thank you for jumping on, mate. Would you mind just introducing yourself to the audience for me?
Yeah, g'day, Ryan. Yeah, thanks for having me on this evening. My name is David Pugh. I'm an amateur trader from Perth, Australia. I grew up in Australia, lived in quite a few countries around the world. Lived in London for a while, lived in Dubai for a while, lived in Malaysia most recently. When I was in Malaysia from 2015 to 2018, that's when I got introduced to crypto. I was in a marketing group, and it was the thing that was being talked about at the time. But obviously, new into the market, I didn't know a great deal of it, and I was very skeptical. I remember I was in a taxi in KL, and there was a taxi driver talking about Bitcoin, and I was like, "You're crazy! No one wants to buy anything for $300. What do you want to pay $300 for something that doesn't exist or doesn't do anything?" And so lo and behold, now we're what? We've cracked 65, or we've almost cracked 65,000. We've had a bit of a reversal, and it's the biggest thing. It's the biggest thing ever. So it's been an interesting couple of years.
Yeah, definitely. Look, you recently featured in a popular or on a popular news article through StockHead, which is actually how I found you. I wanted to chat to you about how that experience was, obviously being featured on StockHead.
Yeah, that was interesting. That sort of came out of nowhere. Over the last 2 weeks, the price of Bitcoin went to, I guess, talking round numbers, went to 65,000 or 64 and a bit, but it had been struggling to get over the 60,000 mark. So it was hitting a pretty solid resistance line for going on about 50 days. So my thoughts were, okay, so if it punches through, it's going to hit that 65,000 mark, and where's it going to go? It's probably going to retrace to 65,000. And me being I guess more of a trader as opposed to a hodler of Bitcoin, my thoughts were, okay, so we've reached a high point. It's not an all-time high. It's like a local high. We've hit a point. All right, you sell your stack and then you buy back in lower. So that's all I was really getting at with the article. But what kind of got me with the article was, like, people were just being decimated. There was the reports of there's $13 billion of accounts being liquidated. All these people are like losing all their life savings. And a couple of days before everyone got decimated, I was looking at my chart, and my chart said, well, to me, it said sell. So I sold, and I didn't lose any of my money. So the article was written like I made millions, but I just didn't lose anything. So that was interesting. But I guess from the last week, I've been feeling like I guess the emperor has no clothes story. So I jumped back in when it dipped, and then it got sucked back all the way down to where it got sucked down to. So you win some, you lose some, I guess, don't you?
Yeah, I guess that's trading for you, I suppose, right? Like, you can never sort of pick the bottoms or the tops perfectly. So I think that's just part and parcel of the trading experience. Look, you mentioned like, obviously a lot of people got liquidated recently, and you sort of seem to have a bit of a different philosophy than the typical sort of hodl mentality that's preached within the Bitcoin sort of circle. Can you explain a little bit about your sort of trading philosophy and I guess trading journey, and like any trading tools and stuff you use, or what sort of analytics and stuff you sort of use to get in, get out?
Yeah. So I'm a big advocate for TradingView. It's such a fantastic tool to, I guess, see the charts and see how see how the different currencies are working. My view was, I guess, having a look at like a Bitcoin chart, for instance, and this is just like in really simplistic terms. Say it goes up to, it was hovering around, say, what are we looking at? Like say pre-COVID, it was hovering around say 12,000, and then it goes up to 20,000. Everyone, and then there's a big sell-off, and it goes from 20 to say 17,000. So that what you can, so as a hodler or someone who never sells, you would then see your account go from 12,000 to 20,000 to 17,000. And like going from 12 to 17 is great, right? But my thoughts were, okay, so what are you going to do with that $3,000? So you could either, if you're thinking, okay, so it's reaching an all-time high of 20,000, all right, sell at 20 and rebuy when it comes in lower. So that's just my philosophy. There's a lot of, I guess, talk about diamond hands and never sell and all that sort of stuff. But I guess if you're seeing your accounts going down, you have the choice of, like, there's a saying, I guess, in trading, you're a loser because you decide to lose. And if you decide to let your account go down, then well, in a trading point of view, you've lost. So your main action is to try and keep as much money as you can. Like, that's the name of the game. So at the end, you want as much Bitcoin as possible, you want as much Ethereum as possible, but you also want as much money as possible. So why would you watch your account go from 50,000 to 40,000 just because you don't want to sell your Bitcoin? Yeah, that's the different mentality, I think.
Definitely, yeah. The hodl mentality, which is, funnily enough, the shirt that I'm sort of wearing at the moment. It's just preached in Bitcoin. So it's interesting to sort of speak to someone, with your background that actually day trades Bitcoin and what have you. What sort of, analytics and stuff do you use? I know that you mentioned, or that was mentioned in the article, I think it was Market Cipher, was an
Yeah, so there's I use a couple of, well, first of all, it was, first I was in a group that, like a Facebook group. It was a paid group that it was preached that fundamentals are the only thing that works. Technical analysis does not work at all. And then I guess you're watching a lot of, I guess, YouTube videos, and it's all technical analysis. Crypto loves technical. So you're looking into it, and, well, I guess it struck a chord with me, like, yes, it does. Like, a lot of your crypto coins will go from one resistance line to one support line, and they'll go between the two. So they can have these 10% swings, and they'll stick in this little band. And I guess getting back to when I started in crypto, say 2017, I had quite a fair stack of XRP. I didn't know what to do with it, right? And my complaint was that it doesn't do anything. All it does, and this is within crypto winter, all it does goes from 23 cents to 28 cents and back to 23 cents and back to 28 cents. So and I didn't do anything with that. But with my trading mentality now, I would go, well, that's a 12% swing. I could be making 12% swings every week. But back then, I just thought, it's not doing anything. What am I doing? So I guess getting back to Market Cipher, say, I would go, I'll start again. With the way I question what I'm doing, if I get to a point where I've reached a point of my own training, or where I can take myself, then I'll either search online, what are the best trading tools available? Like, just a simple search. And over a couple of days of searching, this Market Cipher came around, right? And so this is a plugin to TradingView. And so what this does, it just really tells you when the money is coming into the market and when the money is leaving the market. That's as simple as it is. There's so different indicators which will essentially tell you when to buy and when to sell. Say I would generally trade on a 4-hour chart. Like a 4-hour chart will show you basically the trend reversal. Like say as a swing trader, someone who trades maybe not every day, but I might buy if I'm buying the low point of a trend, the trend might run for, I don't know, 2 days, 3 days before it tops out and then starts going down. Maybe even less. But say I'll trade on a 4-hour chart. When it bottoms out on a 4-hour chart, Market Cipher will give me a little green dot. And if my little green dots line up on the 4-hour chart, on the 24-minute chart, on some of the other lower charts, then I know that's a good trade to go in, and then I'm in. I won't generally risk more than 5 to 10% of my account on a trade, but it's you back test it and you analyze the theory, and if I don't take the trade based on those, I kick myself because it always seems to win, and so it would win probably 85% of the time.
Wow, that's a pretty pretty good strike rate.
It's good. It's good. So me being cheap. So the first thing, and the Market Cipher guys will probably kill me for this, but I think they have their premium, or they charge what they charge for it. But me being cheap, I would always put free version into Google or into YouTube, whatever. And so there are free versions available. And so I run a free version. I've also found a free version of the paid version. So I've found the next level up. So they are available for free on the internet. But for a system that works, and for a new trader with a small account that is looking for all the tools possible, it's brilliant. It works really well.
You mentioned as well, technical analysis versus fundamental analysis. Do you do any fundamental analysis, or do you sort of see that it has a place in, I guess, the crypto space as well?
I guess I would mainly, I do see fundamental analysis, definitely. They both have their points. Say if you're like anything, it's your money that you've worked hard for, so you don't want to throw it away on a team that are anonymous. So if I was looking for from a fundamental point of view, does the industry, or does what the project is looking to, does the problem that the project is looking to solve, does that make sense to me? Does it have any other competitors? Is the leader of the team, are they good? Have they worked on other projects before? So from that kind of analysis, okay, cool. So we've got our base, and now, okay, so what do the charts say? So did we start off really strong? Did we have a 400% move, and then all of a sudden it's crashed back down to zero? Like what? Then my thoughts would be, why did that happen? And then so we might, instead of jumping straight in, we might just wait a while, see what the chart's doing. If it's on an increase, then sure, we might jump in. But if it's, sometimes you'll get, and for instance, like an example might be Ecomi, right? Ecomi being I only recently got into it. It looked like it had a great team. This is an NFT project. So it looked like it had a great team. It's probably got an excellent future. And it was one of these ones where, say, for $1,000 US, you could get 100,000 coins, tokens, and say, let's ride that out for the next year, and it gets to 10 cents, and you've made a lot of money. It's fallen apart. Like the fundamentals are brilliant. Technically, it's just completely fallen apart. So then sometimes the two just don't marry. But like the top 10 projects, they all have really good fundamentals, and they have very good technical as well. So you can trade them on both sides.
Yeah. You mentioned some good points there. I mostly sort of just invest, so I don't actually really day trade, to be honest. I haven't done enough research into, technical analysis to, probably take the plunge yet, to be honest. I have dabbled, obviously. But yeah, most of my research is basically based off fundamental analysis. So like you just said, reading the white paper, making sure the project's got a solid team. Do you understand exactly what problem they're trying to solve? Does it actually make sense to you, like to me as well? It's not just some, computer sort of lingo that you quite literally have no idea what's sort of being said or proposed. Researching the team's a big one as well. A lot of research on LinkedIn, seeing if people are actually reputable, what other projects they've worked on, are they a real person? All these sort of things are quite, important, I guess, to sort of, wrap your head around and, just to do a little bit of, I guess, due diligence as an investor. Yeah. So you first got into crypto in 2017. I wanted to pick your brain and see how you sort of thought the industry has changed since then.
Yeah. So 2017, I guess when I got in, it was a lot of hype. Hype was surrounding the market. It was new, well, relatively new to most small-time traders. And around that time, it also peaked. I think Bitcoin peaked out at $20,000 or whatever it did, and then died off to I think 3,000, 4,000. So it was a lot of hype. It was built up. It was going to be the biggest thing ever. I think people then thought it was like the success of it was linear, where it was actually it was the first kind of parabolic move most people have been involved in, and then it scared a lot of people off. But I think it scared me off as well. So I'd put my money into it. I put my $5,000 into it, whatever it was. It like in the course of a couple of months, it went from 5,000 to 20,000, and I thought I was brilliant. I thought I was a genius. Like I hadn't done anything. I just bought what everyone else was buying, and then it over the course of a couple of months, it all dried up and got itself back down to about, say, $2,000. So I was in the red for about a year and a half after that, because I wasn't actively trading. I was a bit scared off and was waiting for the market to become legitimate, which it has now. You're getting a lot more institutional investment. You're getting a lot more people talking about it, and there's a lot of good projects. So you've got like your Cardanos, you've got your Ethereum, which is going through their development as well. So these were all they were in their infancy back in 2017, and now they're legitimate projects. So it's actually been really good for the market.
Yeah, absolutely. Funnily enough, we got into the crypto market itself roughly about the same time. I've still got the first transaction I made on my phone, actually. I've just finished working for a gym and got paid out some annual leave, and just used $500 of the annual leave that I got paid out to buy Bitcoin when it was sitting at about 5,000 Australian dollars. And like you said, it sort of went, I think the Aussie top was about 25,000 Australian. And I think I got out around about, it was close to 20,000, somewhere around there. I missed the top. Obviously it hit the top and then started coming down. And I was happy with, the little gains that I'd kind of made. And I wasn't working at the time. So I took the money out and spent it on something stupid. I think I paid my rent or something like that for the next 3 or 4 months, which was pretty cool at the time. But then since then, I sort of just kept watching and buying little bits here and there, and trying to keep up to date with some of the projects you just mentioned, like Cardano, obviously Ethereum. Missed out on the Binance train, unfortunately, although I'm on it now, but missed out on Binance at about $18. I'd seen it and just watched it and watched it, and then I saw it go up to 50, and I was like, oh, I'm not going to jump in, and saw it go up to 100, and I'm like, oh, I'm not going to jump in now, and I think I jumped in somewhere around about that $280 or $90 mark. So yeah, it's interesting how the market swings and how things have changed. Dave, you obviously mentioned earlier to me while we were chatting offline, there was a couple of DeFi projects that you'd invested in, and those investments had gone negatively. Can you sort of just chat to myself and I guess the viewers about what projects you invested in and what sort of happened in those situations, and I guess what you learned from those negative experiences?
Yeah, definitely, Ryan. So the when I was coming back into coming out of COVID, I guess I'd been working at home for a long time. I had a bit of spare time. You jump back on, you see these DeFi projects that are really kicking off, and so like 16,000% interest and even higher. Like some of the gains, well, I guess paper gains or real gains some people were making were pretty incredible. So me with a small account, wanting to get myself ahead, put I think a couple of Ethereum. At that point, Ethereum was like maybe $300. So it wasn't a huge amount of money, but it's still for someone who's starting off, it could be their whole account. So you invest, you put your money into. I put my money into it's an APY center. And so, so this thing it was like my first experience into a DeFi project. Heard DeFi was going to be the next big thing. I then learned that some of these DeFi projects will lock your money away for a set period of time. So in that time, that was, I guess, my first staking experience and putting money into a project. So they lock it away, and then say over those 4 or 5 days or however long it was, my money went from $300 to $20,000. I was thinking, this is great. We're onto a big thing. Then the people who got in front of you take their money out, and all of a sudden, again, you're left with nothing. So that was the catalyst for me going, okay, this can't happen again. Like I need to get educated. I'm back in the market. It's changed. It's legitimized itself, but there's still smart people taking advantage of dumb investors, or smart money taking dumb money away from dumb people. So I need to get myself educated. I need to do a couple of courses, and I need to understand what I'm doing, because I can see there's a lot of opportunity in this market, and a lot of opportunity to make a lot of money if you're smart about it. But having a small family, I can't be risking my money and my family's money on stupid projects or things that most people with just a touch of education would think this is a scam. Don't do it.
Yeah, absolutely. Obviously, unfortunately, the crypto landscape is, a little bit convoluted, and there are those sort of, smart people taking advantage of the less smart people, I guess. That still happens. That still happens to this day. Obviously, unfortunately, there's rug pull scams that happen. People staking money and then they lose it through, whatever sort of happens. So I have, you still hear about all of that sort of stuff happening now, even after the industry has been, I guess, legitimized for the last few years, I should say. What's your ultimate goal through trading crypto, Dave? What's your end goal? What are you trying to achieve?
Well, my end goal is, it's something that I love doing. My end goal is, of course, to retire off the earnings that I get from crypto. I like the trading aspect of it. I like how dynamic the market is. I like how I can geek out on these sorts of things, right? So like how the charts work on projects. There's so much to look after. But say I work a full-time job. I do love what I'm doing, but I guess at some point you have to weigh up what's making more money, and can I do my job from another country? at the moment, I can't do my job from another country. I wouldn't mind. I've spent a lot of time in living in other countries, and as a lifestyle, that's really great. So if it gets to a point where my crypto is making more money than my day job, then we would have to make a switch. I met my wife when I was living in Malaysia, and she loves to travel as well. So if we can trade crypto and move around the world, then that would be a dream. That would be the end goal.
Yeah, happy days. Obviously, the crypto lifestyle is pretty awesome. You know, working from home or literally working from anywhere that you have an internet connection, basically. So that sounds like a pretty cool end goal, to be honest. Look, obviously, we're currently in a bull cycle. I've heard a lot of people make a lot of noise about this being, a potential super cycle. Where do you sort of see things at the moment? Obviously, we are in a bull market. That's a pretty big given. But what do you sort of see happening, I guess, for the remainder of 2021, and then I guess sort of, beyond into 2022 and 2023?
So you have a look at some of the videos, and obviously on YouTube, I follow a couple of people, and there's talk of $1 million Bitcoin or $400,000 Bitcoin. Like, we're struggling to get over 55 grand at the moment. So, and we were struggling for, say, 6 weeks to get over 60,000. So I'd love for it to go to 100,000 or 200,000 or whatever it does. But I guess me with a small account, I can't control that. Like, I have to ride the wave up. But I guess what I'm looking at is daily closes and daily candles for Bitcoin, and Bitcoin being, I guess, the major mover, which kind of dictates everything. If it looks like we're getting, say, for instance, my personal thought would be at $100,000, we're going to have a big sell-off. It's a big psychological point. Then it may retract itself back down to 80. Will it recover from there? I don't know. But say if we start getting closer to 100, I would be looking to sell. If we can buy in lower, I'll buy back in lower. If we then go to 150, I would then sell at 150. But as soon as we get up to those psychological points, I would just be following, Bitcoin up to like 100, 150, 200. If it gets over 250, that's great. If it gets to, say, if we get to 100 and then it goes to 80 and it's not looking like it's going to recover, then I'd most probably liquidate all of my accounts into some kind of stable coin, because we may not recover, and it might continue to go down. But you just have to weigh it up, really.
Those psychological numbers you were talking about there, do you know a lot about the psychology behind them and why they are sort of barriers for a lot of people?
Well, I guess I don't know a huge amount. All I can, like, from my basic knowledge, is when people say, I want, let's say, $1 was a massive move for Cardano. Like, everyone was pushing it up to $1, then up to $2. But you see, for even looking at the chart for Cardano, it got up to 97 cents, and then it fell back down very quickly to 70 cents. So there was a push, everyone buying, and then straight back down to 70. So there's all these, I don't know, say it could be institutional investment, it could be mum and dad investors. People like round numbers. So they like $1, they like $1.50, they like $2, they like 50,000, 60,000, 100,000. They like these round numbers. And so as soon as it gets to that, there's a whole load of sell orders lined up, and then that's what brings the whole market back down. And then, say, the institutional investors may have big orders at 80 or at 70 or at 90. So they're going to use that to bump it back up so they can make that 10,000, and then continue on from there.
For this current cycle, were you surprised to see so many big institutional investors jump on board as well, or was this something that you that didn't really surprise you, at all?
It's interesting. I guess I was kind of yes and no. I was not surprised to see Tesla. I was not surprised to see like Elon Musk and those guys getting involved. When it was, I guess, being legitimized, I was, and so you see like the crypto.coms and those guys getting involved with Visa and I don't know, BlockFi getting involved with MasterCard or wherever they're getting involved in. So I wasn't surprised to see Visa and MasterCard getting involved, but I was surprised that, like, say your JP Morgan's now getting involved. They might be putting an EFT out where they were dead against it. I know that the stories of like Jamie Dimon was if he ever catches any of his traders on the floor or anyone ever talking about Bitcoin, like you're out of a job. And now he's recommending like all his rich investors they need to have some kind of digital asset class. So and that's when all the institutional investment, when guys like that start legitimizing it or say it's not as bad as we thought it was, then yeah, that's where the fun starts happening, doesn't it?
Yeah, absolutely. I think it is funny that a few people have big people within the finance and investment sort of industry, back in 2017 and obviously further back than that, we're talking down to Bitcoin and calling Bitcoin enthusiasts crazy and all this sort of stuff, and saying that if you bought Bitcoin or whatever, you're not part of my company anymore, stuff like that. And now all these big players are, recommending people to buy Bitcoin and recommending their investors and stuff to purchase Bitcoin or what have you. It's quite a funny sort of, pretty big 180 from a lot of people, I think.
It's good. I think it's good that it's kind of, it sounds like it seems like it's found its place. And I guess the narrative being that Bitcoin is, I guess, digital gold, right? That's what they're saying. So instead of it being the currency of the future, like a lot of the narrative now is that it won't. It's a storage of value, and so that was probably the biggest hurdle for most of these guys. So to legitimize it as, okay, it's a storage of value, it's worth, it represents a dollar value of 50,000 or 60,000, and they're okay with that. And if they're okay with it, then little guys like me are okay with that as well. So Bitcoin's become your gold, and now, okay, so now there's a place for the rest of them. Okay, so what is Ethereum? Is Ethereum a currency? Well, yes, sure, you could trade it, but it's more of a platform. Okay, so is Litecoin going to be the next thing? And I guess that's what that's as some of the other narratives are saying. Okay, so Litecoin being a lot faster, cheaper, more accessible to the normal person. Maybe that's going to be the new currency, or Dogecoin's going to be the next currency. But
imagine.
Maybe it will. Maybe it will.
Imagine.
I don't know. Oh, goodness me.
Yeah.
Stranger things have happened.
Yeah, absolutely. Look, we've been going for about 35, nearly 40 minutes now. I just wanted to ask two more sort of questions, Dave. What sort of advice could you give to, I guess, the average investor or the average trader? Obviously not financial advice, but what would you sort of, advise people to do in terms of educating themselves, I guess, about trading and about investing within the crypto space?
Yeah, so for a small investor, say for instance, if you started tomorrow and you had $2,000 to spend on cryptocurrency, I would be spending $1,500 of that on education before you start investing on anything. There's a saying, I'll probably get it wrong. It's like, but yeah, basically it's like the more you spend on education, the less the market will take from you. So get yourself in, like, best to understand what the what the charts are doing, understand where your money's going. Like, you work hard for your money. So it's not like Vegas money. No one goes to Vegas to lose money. They'd like to walk away with something. Like, it might be stacked against you, but educate yourself, get involved in a couple of courses. There are good ones around. They don't have to cost you too much money, and there's a lot of good resources on YouTube. Majority of them are free. TradingView is a brilliant resource. When you're starting off, it is like learning another language, but if you persevere and want to understand why your favorite coin went up 30% today, then like a lot of the answers are in the chart, and that's where you'll find a lot of your answers. But it's perseverance, it's education, and try to keep your money with you as much as you can. You don't want to be giving it to other traders because they took the opportunity to get educated on what they were doing.
Absolutely. Look, Dave, do you have any sort of closing thoughts for the audience as well?
Closing thoughts. Just got to stay positive in the market, I guess. It's be cautious, but be positive as well. There's so much opportunity around, so many good projects. Just keep trading and keep positive, and I'm sure everyone will have a fantastic future, and we'll be buying yachts and driving Ferraris and having driving Lambos, and then everyone have it's a good future. I can see a fantastic future for crypto, and especially trading and everyone getting involved in it.
Absolutely. Look, Dave, thanks so much for your time. I really appreciate it.
That's great. Cheers, Ryan. Thank you.